Hello everybody and welcome back to another video. In today's video, we've got a bit of a special one where we're going to be analyzing the last 10 years, 20 years, and 100 years of performance over the next couple of months for the S&P 500. There's a lot going on in the markets right now, and of course, there's a lot of FUD, a lot of concern, a lot of fear, and a bit of euphoria. So should we be concerned? Should we be looking for longs? There's a lot to answer, and hopefully we can do some of that during this video. Stay tuned. Okay, everybody, well, one of the best places for us to start today's video is to do a bit of a recap for the 21st of July 2021's market close. And straight away, we'll see semiconductors were certainly back in town. Financials were back with the US 10-year yield rising, and energy had some recovery off a very strong support that we covered in yesterday's video. But I want to discuss where we are right now in the markets, because I think we're at a pivotal time where basically we're coming into what is traditionally one of the worst couple of months for market returns. And at the same time, we've got some really interesting stuff going on here with the retail traders. This is a bit of a line effectively taken from what is the general consensus on Twitter right now. I always say if we're in overconfidence and Twitter is really confident about the market, then generally we're about to see usually some bearish action. Remember, Wall Street takes advantage of retail traders. It's no secret, and it certainly does play out here. You can notice when the overconfidence came in, the market did start to decline. So when you can bring the technical analysis together with this type of sentiment indicator, it works quite well. Now you'll notice over here on the right-hand side, fear was at a very big point, but then that fear has changed into optimism over the last 48 hours. It's amazing how fast things can just click like that and everything changes. Remember, yesterday it was all about the Delta variant. It was all about tensions. It was all about whatever excuse they came up with. It's like it just disappeared in one day. And I always find that really funny. But if it's your first kind of year in the markets, this is what happens, guys. It happens all the time, and we need to realize that. So let's look at some data points, and I always call this actionable data. It's something that we teach in our courses, we talk with the community about, and something that's really important for you to understand. Think of it as your top-down approach for when you're trying to make a decision about whether you want to trade that market at that time. And one of those things is seasonals and also monthly returns. Now we know here, over the last 20 years, over the last 10 years, in post-election years as well, and since 1950, we actually have some pretty bad returns in the months of August, September. Now, I want to just quickly highlight one thing here. Post-election years. That's where we are right now. Take a look. What have we seen so far? We had a bad February for the Nasdaq. We had, I would say June was fine. But then we have this big downtick in August, and of course, a big uptick in July. Now, so far, July has been okay. Yes, it's pulled back a little bit, but overall, it's still been an up month. What if August and September follow the same track record as other post-election years, let alone the past 10 years of returns, let alone the past 20 years, or since 1950? August, September are the worst 2 months in the year, and I think you need to be paying attention to this. If you're not looking at these data points, maybe you're ignoring something. And this is more important when it comes to buying the dip. So right now we've seen a great technical level. We'll be talking about that soon. We also know that Wall Street's been purchasing up. Yesterday, they took the IWM higher. They took, of course, the Dow higher, the S&P 500 and the Nasdaq higher, all into the close. But with big Apple earnings coming out next week, the discussions of debt ceiling, and of course, the buy the rumor, sell the fact kind of events that we often see come into things like Apple, Tesla, those types of, stocks that are announcing soon, are we just about to potentially have that turnover? I'm going to be optimistically cautious. So what that means is, am I entering new positions? Me, not personally. I'm not really doing too much at the moment. I'm just chilling back. But that's because I've been doing this a long time. And I'm happy just to know that if I'm getting in, I'm going for the day trade, I'm going for the scalp, and I'm going to lay back here and let these things play out. There's just too many negatives coming into the market right now. It doesn't mean you have to stop looking. It just need to be aware of this data. So we've got here XLE, biggest kind of returns yesterday in the markets. Utilities were down, and XLP was also down. These are the consumer staples and utility sectors, usually the more defensive ones. So if we start to see them uptick again, that could be a bit of an early warning sign that something's a little bit sick in the markets. We, of course, have the beginning of some big earnings here as well. On the Thursday close, we've got Intel, Snap, and Twitter. I think this will really lie the land of a little bit of how well social media has been going over the last quarter. Also, whether Intel's taken back some share on AMD, probably haven't, but if they have, and also what may be in store for the big tech stocks next week, because that's going to be the most important earnings that we've seen so far. Usually that dictates what's going on. Now, we mentioned so much stuff earlier, as I said, but let's get into the technical analysis here. And we'll begin by looking at dollar index. Straight away, I see that it's back on support. We have resistance, support, support. Now, would you be like, oh, I love buying this zone because we're back on support? It's not quite strong enough just yet. We want to see a bit of a lightning bolt style action. Basically, we want to see this take off. We need some momentum here, and we want to always wait for that type of thing, because when it comes down in 2 large candles like this or 3 large candles like this, it's like catching the falling knife. Never catch the falling knife. Wait for the market to tell you that things have changed. Dollar index still looking bullish for now, but we need that market change on a more significant time frame, 2 hour, 4 hour, etc. Now, gold also has been suffering a bit here with the stronger dollar index. It's been suffering. Gold is basically testing this massive support here around 1795. It's bounced twice now, but it is weakening into this. Would you buy it off this level? This is the type of thing that when you see a series of lower peaks coming through and lower highs coming through, that's not the market structure that we want to see as traders. This is the type of thing that makes us think, this market's weakening. So again, it's all about waiting for it to bounce, waiting for it to pull back, and making some kind of lightning bolt, showing structure. Unfortunately, gold for now is looking weak into this support, and if it breaches this support, I believe it will go down further from a technical perspective. It's just looking a little bit too weak here, so we'll continue to cover it, but that's how it's looking. US 10-year, this is one that's back on really a role reversal kind of location. We've got here previous support becoming resistance. It's a great little zone here. Daily 200 as well. If we see the US 10-year go down, that will be bad, of course, for the banks, and it might be good for something like the technology stocks. So it's a very key zone that we'll, of course, be watching and following throughout the next couple of days. If this turns around, could also lead to more US 100 gains. So watch that one with a decent amount of ease. Bonds, we'll be watching this incredibly closely. An increase in bonds and bonds going up overall, if this does occur, usually means that there's a bit of risk off sentiment. So basically, Wall Street is continuing to pressure or push away from being in the stock market, and they're letting retail buy the dip, letting retail in. And we generally see this by increased volume in the bonds, and on top of that, a decreased volume on the bull side in the stock market, a very small amount of volume going up. That usually means only retail traders are left and the big guys aren't there. So we'll have to watch that when we're looking at the S&P 500 and others. IWM came back incredibly strong here off the support. Boom, 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 big bullish candles here. I'm just using this one more as a sentiment indicator. You'll notice previous support could act as resistance, which may mean Thursday is setting up here for a little bit of a kind of sideways decline day after these big rallies. However, this is just really more of a guess in the middle of the range. If you break either side, being the resistance or the support, we should be able to go the distance, and that will really prove to us whether this market's got more legs in it or not. If it breaks the support down here, the bears are in full control of this market, and that's the type of thing that will lead to, a larger correction, more like a 10% style correction on the S&P, because this is a serious channel and it's been setting up for quite a lot of time. Remember, weakness starts often in the smaller companies. All the financials in here as well. There's about 22% of their Russell 2000 is financials. That is a big, big indicator of whether there's strength or weakness in the market. Onto the QQQ. Well, the QQQ, of course, did bounce. It bounced, it filled the gap, and it's continued its movement up here. Volume is okay. I would say it's not any less than it's been during this kind of bullishness so far. So it's not a terrible amount of volume. We'll have to see how the Thursday plays out and the Friday plays out. I will note a few things. Amazon has some amazing amount of calls on it due for expiry on the Friday session. And I'm talking not just a little bit. We're talking millions and millions of dollars of premium on the call side. And they were all set up pretty much earlier this week. So when you start to look at some of the stocks, a lot of these FANG stocks may be just kind of holding back a little bit to make sure those options expire worthless. There's a serious consideration there. I think it's about $2 or $3 million that I saw come through in our private community prints. That's nothing to be squeezed at. And often the market will actually sit underneath those calls until they expire and then make its next decision. Something to be, thinking about. S&P 500, probably the cleanest chart right now with the Dow. We saw the 50 exponential moving average hold it. It did close above the 20 yesterday, filled the gap and continued on. Were there any signs on the smaller timeframes that this was going to happen? Well, it pretty much just ground higher. You can see all of the day it ground higher. And really the only sign was at the open, we did have like a little gap movement up, and this just signaled further bullish pressure for the entire day. You'll notice here a bit of a range in the futures or the close. The market opened up right above, broke and closed above, and led to further gains. Where we are right now, it's hard to call either way. I mean, you could say, oh, we're very close to resistance on the left-hand side here. You could say, okay, we've got resistance at the 4,400. It is tough to read the indices at this stage. So really what you've got to do is dial into specific stocks, pick specific stocks that you like, and you like the kind of price action that's behind those, and then just do a bit of research on those, look for the technical indicators. I think they're going to be easier than the S&P 500 for now, but the S&P 500 will have its day, especially if it goes either to a new high and then goes into our bigger community trend line over here, or it goes to a new low, and of course the bears will have control, creating some great shorting opportunities and potentially dip buying. So a lot of this video is really just setting people up with the idea of we're going into a weaker months. We know that statistically they have been weaker. We want retail traders to be incredibly optimistic on the market because remember, when everyone's optimistic, Wall Street takes advantage of that. And we have some great levels that we'll know when that happens. It's going to be something like this trend line here on the Dow gets broken below. If we fail to make a new peak, we come back down and test this trend line, it's unlikely to hold. Because of course, every time the market goes up, it really should be making a new peak and then a higher peak, higher trough, higher peak, higher trough. A sick market will not be able to come back correctly. So the Dow's back on the resistance, coming into the Thursday close. It looks fine. I mean, there's nothing showing us bearish action right now. It's just really more the bonds, the 10-year, and the dollar index that are showing us some warning signs. But it's just warning signs. At the moment, we have to remain bullish. There's nothing you can do about it. If that's what the price action's doing, you can't just be a bear when the price action is not going bearish. You know what I mean? You have to stick with what the price action's doing. Now on to Tesla. We've done a little bit of analysis last night on this into earnings. So earnings will be coming out, I believe, on the Monday next week, 26th of July. And Tesla performs randomly into earnings. Sometimes it seems to bull a little bit into earnings, so that kind of leads to a little bit of bullish anticipation. Sometimes it kind of hovers, and I've even seen it sell off a few times in. So we're on the trend line. We've, relatively speaking, kind of recovered here. I mean, the best case scenario into earnings, you're looking at a 690 most likely. The worst case scenario is you kind of sit around here or go back down to the 630, 620 level. So Tesla, pretty hard to read. Maybe if you want to go into the smaller timeframes, there might be more advantages in some day trades there, such as, buying it off these moving averages here with a bit of follow through. You can see it's hovering in this range quite a lot. You've got bullish style hammer, wick rejection, lots of conjecture, smaller time frame. That's the kind of thing that you look for as a day trader. However, just not very clear signals there. Stuff like Amazon I mentioned before, that was something that we've seen a lot of call options on. And it looks actually pretty good on the charts. Looks similar to Facebook yesterday, which did run about 1% and a bit. However, again, so much expiration of options on the Friday close. Will that be holding back Amazon's price? We'll keep watching it. It's going to be a good experience for everyone to check out, because with that many option prints, it's usually going to hold it back, because most options, in fact 70% of options, expire worthless. We always need to remember that fact. On to Bitcoin, just to finish up here. Bitcoin is continuing to just hold these wick lows. It's continuing to do that. Obviously, the weekly closed under the 50, which is a bearish sign. It's doing its very, very best to recover and do well here. It's at a point where you expect sellers to come back in. It's sold off the daily 20 now multiple times, and this is the area where the bulls and the bears will fight it out. You get above this 20, you know what? Things are looking a lot better here for Bitcoin. But for now, we're still in the downward trend. We're still seeing bearishness. nothing much to say is making us bullish here. Thanks so much for joining us, guys. If you enjoy the videos, please remember to subscribe. Have a look at our live streams as well, 1 hour before the New York Open. And remember to click that little thumbs up button or thumbs down if you don't enjoy it. It does help us out. Thanks very much. Bye for now.